The promise for today. By the end of this video, you'll know about legendary traders who successfully use volume price analysis, showing you that the tools you're learning are the same ones that built success for over a century. If this is your first time ever clicking on one of my videos, hi, I'm Caro Trading. I'm on a mission to help you easily implement this volume trading strategy so you can become financially independent for life. And maybe you can even teach it to other people in the future. Everything that I'm sharing with you is based on the things that I have learned myself through experts such as Anna Coulling, Richard Wyckoff, and Richard Ney. And I want to highlight that these videos are not for those that are looking to be entertained or for a quick shortcut. Instead, they are for those people that are on a deep, self-discovering, self-educational journey that are willing and able to put a lot of time, energy, and attention to doing the reps to get really good at something, because trading is something that takes years to master. And as always, don't believe anything I say, verify it. Don't believe anything of what I'm telling you, because otherwise you're gonna fill your mind with even more beliefs. And this is not a course to do that. This course is purely meant to share the tools that have worked for me and for many experts so that you can then take the tools, apply them yourself, and verify through your own experience whether they work or not. So basically, search for your own answers, because that's what it's all about. Now, in today's chapter, we're gonna go a little bit back in time and we're gonna take a look at who are some of the most important volume price analysis experts. I know some of you might be thinking, ugh, Caro, do we really have to go through this? Like, why can't we just go straight into the technical aspect of things? It actually depends, because if your goal is to increase your chances of success at using VPA, volume price analysis, then yeah, the best thing you can do is enjoy this video. But if your goal is to go as fast as possible through this material without really knowing why you're doing certain things, then yeah, feel free to skip this video. It all depends on the goal that you want to achieve, and only you know the outcome that you want. But for those of us that do want to increase our chances of success, we then first have to answer a very important question, which is, why should we even care to know about VPA experts? Because the value of learning comes in not me spoon feeding you the answer, but in you getting to the answer yourself. I'm gonna ask you 3 questions to answer this question, if that makes sense. The first question would be, what do you think changes when we know the experts behind a specific method? Because we know that there are thousands of trading methods out there. Choosing VPA would be basically the same as marrying VPA, you're marrying the one and only. It would be unreasonable to marry one person without knowing any background information on the person, right? Like, that's what the whole dating phase is for. So if it's unreasonable to marry a person without knowing anything about the person, what makes it reasonable to marry VPA without knowing anything about VPA in the first place, right? Perhaps knowing a little bit about the experts is going to give you the crucial background information that you need to know to answer the question, why should I commit to this VPA strategy in the first place? And the second question would be, what can we learn by knowing that different experts use the same method successfully? Because there were multiple experts that have used some shape or form of volume and price analysis in their trading. They looked at price, they looked at volume, they mixed them together, they noticed patterns, and they trade based on those patterns. And they were all successful in doing that. So if they all succeeded using the same volume and price methodology, then what does this tell us about the method itself? Maybe the VPA method is not as rigid as many think, and it's actually widely applicable. And lastly, if the expert left clues in their legacy, when I say legacy, I mean probably white papers, books, newsletters, why wouldn't we want to know where we can find those clues if we want to become better traders? Because trust me, there are going to be times in which you're going to hit a wall. You're going to be mentally foggy, you're going to have a mental crisis, and you're going to think, oh my God, Caro, I don't know what to do now. Yes, I'm learning some information about VPA, but I feel like I'm stuck and I don't know what to do. Well, what better way to regain clarity than knowing in advance where to search your answers for when that moment comes? Because one thing is being in a complete mental crisis and then having to think, okay, where do I find these answers? And another thing would be, you know what? I feel stuck, but I remember somebody mentioned this book from this specific author and it's about VPA and it was highly recommended. Let me go check it out. And trust me, you're gonna find many answers in there. You're gonna find a lot of inspiration and it's gonna get you out of that stuck mode. And I mean, the gems are out there. It's very valuable information. It's like not knowing where the diamonds are. We want to know where the gold is. We want to know where the diamonds are. Same thing. Let's take a look at where the diamonds are. And before we continue, I want to reassure you that this is not going to be some boring history class in which you're going to get a PowerPoint slide with a bunch of bullet points with dates on them and names of places where they were born. No, this is meant really to take the understanding with us. So let's start with the first VPA expert. Number 1 on the list, we have Wyckoff. I call him the effort versus result guy. And the reason that I call him the effort versus result guy is because he pioneered something that is called the effort versus result law. And that is the whole foundation of this volume price analysis strategy. In later chapters, we're going to delve deeper into how exactly does this effort versus result law work, what are the mechanics behind it, how can we use it to our advantage, because it's really the foundation of the rest of our VPA building. But for now, Wyckoff is the effort versus result guy. Now this Wyckoff dude, he was a stockbroker and a trader. A stockbroker, in simple words, is somebody that buys and sells shares for other people and gives advice to those other people on when to buy and when to sell. And much later on, he even became a teacher, teaching all the volume and price things that he figured out along the way. Now, the interesting thing about this Wyckoff guy is that he was down in the trenches very early on. And what I mean with early on is that he's been working in finance ever since he was 15, where he worked as something we called a board boy. Now, I'm gonna show you what a board boy is because that function doesn't exist anymore. This is a board boy. You can imagine that before there wasn't such thing as TradingView. Back in the day, the best thing that you had is you got the information and somebody had to write that information on a huge board so that the other traders could read that information and then make their trading decisions based on whatever the board said. And the person that was responsible for writing all of that information on the board is what they called the board boy. And that's exactly what Wyckoff did when he was a child. He was a teenager, he was 15. But the interesting thing is that this was the first time that he came in contact with volume and price, because the very information that he had to write on the board were those two things, volume and price. The price at which the shares are being traded and how many shares, volume, were being traded at that specific price. So it was the first time that the volume and price doors open up for him. And by working as a board boy, Wyckoff actually started noticing patterns by looking at volume and price. Patterns that later guided him into knowing when are the big dogs buying and when are they selling. And all of these findings that he learned, he took it with him, and he even became one of the first to teach how to use price and volume to follow the big dogs. So from Wyckoff, you're gonna hear a lot, price moves because of supply and demand. This is not only a Wyckoff thing, many economists explain this, but it's related to Wyckoff. He repeats this often. He also says, big dogs leave clues through volume. Check, we already know this. He also says that the markets have always moved in repeatable cycles, and to this day they still do. And he also says that we can therefore use price and volume together to follow what the big money is doing. And you do this through the so-called effort versus result law. And then again, no worries, we're gonna take a deep dive into effort versus result in later chapters. Another interesting thing about this Wyckoff guy is that he closely watched legends like JP Morgan up close. And when I say JP Morgan, I mean JP Morgan, the investor that founded the bank, not the current bank. So this Wyckoff guy literally studied how other big players, how other big dogs were trading through price and volume, reverse engineered their moves, and then started trading like the big dogs himself. And he even built many platforms to teach peasants how to trade, such as the Magazine of Wall Street, which had over 200,000 readers. And I know, 200,000 readers, it doesn't sound like a lot for us today, but back in the day, 200,000 really was a huge milestone to achieve. So basically, Wyckoff was one of the first ones to build these education platforms long before YouTube was ever a dream. Now, how did Wyckoff use volume without modern charts? Because we know that as a board boy when he was 15, they just told him what to write on the board. But how did he get the information when he wasn't a board boy anymore? How did the other traders and the stockbrokers get the information in the first place? Let me tell you how. This is something called a ticker tape. It's like an old printer that used to print a very thin strip with very specific symbols on it. This would be the thin strip. And this very thin strip, which is called the ticker tape, showed the most important of the market at any given moment. For example, the stock symbol, which we call the ticker. Now, in this specific example, you have this PP over here, the double P. That would be the ticker symbol. Next, we have the price of the trade, which you can see in the second circle right over here. And then last but not least, surprise, surprise, it also showed how many shares were traded at that specific price, aka volume. So in essence, on the ticker tape, you saw the name of the stock that was being traded, the price at which the stock was being traded, and the volume at that specific price. Volume and price. You analyze volume and price together. And this is exactly what all of these experts use to analyze the markets and be successful at them. And the traders would literally stare at the ticker tape as it printed to decide when to buy or when to sell. Why did Wyckoff exactly see on the ticker tape? Wyckoff actually saw that volume served as a signal about when and where the big dogs were moving. So he actually saw that volume revealed where the big dogs were doing their moves, where they were participating playing so that he could participate, and when they were staying on the sidelines so he could not participate. He also saw that, okay, if volume and price reveals what the big dogs are, he then looked at the price and volume together on the ticker tape to trade with the big dogs himself. So by using volume and price together, he bought when the big dogs bought and he sold when the big dogs sold. He even published what he learned on a magazine about stocks called The Ticker Tape. And this is one of the gems for us to reach out there. This specific book is called Studies in Tape Reading, and it's a classic on the core laws of price and volume. So if you ever want to inform yourself more on how did this tape reading work, what exactly does price and volume mean when you put them together, this is one of the books that you can reach out to. This is Richard Ney, and yes, this is his actual face, and no, this is not his real body. And I actually found a short interview. Don't worry, I'm not going to show you the full interview. I'm just going to show you a snippet of 10-15 seconds so that you can see his face and hear his voice, so you know who this guy was. You know, it's better to see a video of somebody than a black and white picture.
In making it in the market, I show the investor exactly how I think as an investment advisor. In fact, I show her and now the public how I look at the market for my own individual clients, some of them big pension funds, on a low-risk basis, how you can actually go into the market at low risk, in low-risk stocks.
Richard Ney himself, he was a market analyst and later he became a finance teacher. And he's also known as the father of the specialist theory. Specialist is just one of the many names that you can call the insiders, the big dogs, the market makers. So you can also read this sentence as father of the insiders theory or father of the big dogs theory. And surprise, surprise, he also analyzed how the big dogs control the price through the volume tricks. And he also wrote books exposing big dogs' volume tactic. One of these books would be The Wall Street Jungle. In this book, he explains how the big dogs manipulate the prices. More specifically, he showed that there were some traders in the New York Stock Exchange, called the insiders, aka the specialists, that were manipulating the prices and that were doing some nasty tricks to take advantage of the peasants. And Ney then talks about how volume is the way to reveal those big dogs' movements. Basically, everything that you're learning through me, it's in all of these books. And another one of his gems that he left out there is called The Wall Street Gang. And it says here, the book that tells you how to be the Wall Street manipulators at their own game. Now, if that title doesn't do anything to you, then I don't know what will. In The Wall Street Gang, he zooms in on how the big dogs in the media work together to influence the prices. And how because of this, the peasants get on the wrong side of the trades. And this is something that we actually dissected in the previous chapter, or was it the chapter before then? What I'm gonna do is I'm gonna leave a link down below if you want to learn more about how these big dogs actually manipulate social media, your news feed, so the big dogs can trade to the detriment of the peasants. And last but not least, you have Making It in the Market. This is more of an advice book. This is more a book that teaches you how to use volume and price to spot tricks by the big dogs. So this is more the tutorial aspect of things. And if you ever want to go straight to the source, I highly invite you to take a look at these books. You know, you're going to find different answers. You're going to have a different perspective as well from the experts themselves. They might describe a concept slightly differently that is going to click better with you. So it's always good to know where these books are so that if you ever need them, you know where to find them. Jesse Livermore. Jesse Livermore is said to be one of the greatest traders to have ever lived. And at some point, he was even the richest man in America from swing trading. What is interesting about him is that he's mostly known for how much money he made during economic crashes through short selling. Now you might be thinking, wait, how can you make money when the economy is crashing? Well, there's something called short selling, and in later videos I'm going to explain in more detail what short selling is, how the mechanics work, and how we can short sell ourselves. For now, the most important thing that we have to understand is that there are two ways that we can make money. When the price is going up, or when we think that the price is going up, if we use a long strategy, we can make money when the price goes up. If we use a short strategy, when the price is going down, we can make money when the price is going down. And that's exactly what this Jesse Livermore did. There was the economic crash, the price is going down, and he applied short selling. So that's how he made millions during the economic crashes. You actually have two economic crashes that made him a lot of money. You had the one from 1907, and then you had the Great Depression of 1929. And some even say that he netted around $100 million in 1929. So around 1.5 billion for us today, which is interesting because during the crash, there were millions of people that lost all of their life savings. You know, there were people committing suicide because they lost it all. And meanwhile, this Jesse Livermore was actually becoming a millionaire. And he timed his trades by looking at price and volume. This is how powerful this volume and price strategy can be if used correctly. Now, Jesse Livermore, he didn't teach, he didn't write any books, but his ideas were actually written by others. And there's actually this fictionalized biography that is based on Jesse Livermore's character that is called Reminiscence of a Stock Operator, which would be this book right here. This is a book that teaches you valuable lessons to the character of Jesse Livermore. It's more of a mindset book rather than a how-to step-by-step book, but it's still very valuable because trading is a lot about mindset. And it's another classic in the trading world, another anchor point for us if we ever feel lost and we need some direction. We can go to this book and read it. Get some ideas, get some inspiration, you know? Okay, Caro, so you've mentioned 3 different names: Richard Wyckoff, Richard Ney, Jesse Livermore. You mentioned a couple dates, you mentioned a couple books. What should I remember from this? What do you want me to take away from this specific lesson? First thing that I want you to take away is that this strategy that you're learning is not new. I know it's not sexy, you know it's not flashy, it's not learn how to trade in 10 days, or if you only use this strategy, you're gonna become a millionaire in 1 month. No. If you put in the work and the effort, it's gonna pay off because trading correctly takes years of experience. You have to do many years of reps consistently, but it works. And it was used by many legendary traders such as Wyckoff, Ney, and Livermore. So you're not learning a random trick. You're learning something that has been used by many experts back in the day and that is still used by many experts today in 2025. And these ideas also stood the test of time. So the things that didn't work, they already got filtered out by the experts. And the things that worked are those things that get passed on to the next generation, which was passed on to me, and now I'm passing it on to you. So that maybe you can pass it on to somebody else. And if you want a more modern perspective on this volume and price analysis technique, you know, if you think these names, these books, they're too old school, they're boring, it's old school English, I highly recommend you to read this book by Anna Coulling, which is called A Complete Guide to Volume Price Analysis. I read this book twice, and this book teaches you everything you need to learn about volume and price. It teaches you the basics. It's a very good starting point. You don't need any previous trading knowledge. She takes you by the hand, and this is also an expert's view. Like Anna Coulling is somebody that has used volume price analysis for over 20 years together with her husband, David Coulling. Another perspective, another expert, valuable information. It's one of the gems out there that is there at your disposal for whenever you need it. Now for today's brain tickle. For simplicity, I have stated in the previous videos that there is one thing that the insiders cannot hide, and that one thing is volume. Now, this was stated for simplicity, for the KISS acronym. Keep it simple, stupid, to not overwhelm you, to not bombard you with a bunch of nuances. Because there were some people that rightfully and very kindly pointed out that, hey, actually, the big dogs can hide their volume through something called dark pools. And in the last video, I saw this comment, which I'm gonna pin right here, and it's from Enter Taris, and he or she says, big dogs can hide volume. This is done via dark pools. Yes, that is true. This statement is correct. Insiders, the big dogs, can hide their volume through the so-called dark pools. Now, some of you might be thinking, okay, cool, Caro, dark pools, they can hide volume. But what are dark pools? So in order to explain this the easiest way, we have to understand that there are 2 places to trade. The first place would be at a public exchange, and the second place, which would be the opposite of a public exchange, is private exchange or a secret exchange. A public exchange is something that is accessible to the peasants, people with not so much money like you and I, but also accessible to the big dogs. So the fees are relatively low, and very famous examples of these public exchanges are the New York Stock Exchange and the Nasdaq. So that means that the secret exchanges are like the VIP version of these public exchanges. While the public exchange is meant for the peasants and the big dogs, the secret exchanges are only for the big dogs, only people with money, because it's only for those people that have the budget to pay for the VIP ticket for the VIP party. So you can say that they kind of pay a premium fee. And some examples of these are Sigma X and Crossfinder. These Sigma X and Crossfinder, these VIP parties is what we call the dark pools. And what these dark pools basically do for you, again, I'm gonna dumb it down, I'm gonna simplify it, is if you were to buy millions of shares or sell millions of shares because you have the capacity to do that, these dark pools are gonna keep certain information secret from the general public. So the peasants are not gonna see that information immediately. There's gonna be a delay on when that volume information is displayed for the peasants. And that's in essence what a dark pool does. So basically you're paying an institution for privacy, which gives you a competitive edge because the guy that has more information than the other guy and uses that information is the one that has a competitive advantage. And I actually took the liberty to research some of these dark pools, and the thing that I noticed is that these websites are kind of weird websites. Like, they don't have a lot of information, and what they all had in common is it said, if you're looking for more information, please contact us directly. That's it. But let's take a look at Sigma over here. For Sigma, there is a statement that caught my attention, which is as follows. Sigma X allows you to access superior liquidity while providing opportunities for improved execution quality within a safe trading environment. Let's simplify it. You pay a premium price that peasants cannot pay, allowing you to buy or sell massive amounts while we hide that volume for you so you can trick the peasants even longer. Of course, they're not gonna say it like that, but you have to read between the lines. This is basically what they're saying. This is basically the function of a dark pool. So if dark pools are so great and amazing, and if they can hide the volume, then why don't big dogs only use dark pools? That's a very good question, and there are two reasons for that. The first reason being, there's actually a limit to how much a big dog can trade in a dark pool without being noticed by the other big dogs. Because at a dark pool, at such a VIP party, it's not only one big dog, it's multiple big dogs. Let's say you're one of the big dogs and you're gonna buy millions of shares. Yes, the peasants might not notice, but the other big dogs that are at the same VIP party as you, they're gonna notice. So at some point, they're gonna catch on your game, and your whole strategy, your whole move is gonna just go to the garbage. It's not gonna work anymore. So even to stay hidden in a dark pool, you have to be very careful. You would have to split your orders as a big dog. Or option B is trade as much as possible in the dark pool, and as soon as it starts to get noticeable for the other VIP party members, then you trade the rest on the public exchange. You know, like you spread yourself out as much as possible to stay as hidden and as invisible as possible. So using only dark pools, it's not going to work for a big dog, which is why big dogs don't only use dark pools. And the second reason being, dark pools don't always have enough liquidity. Liquidity, in very basic terms, is enough buyers or sellers to match you up with. It's like when you're dating on Tinder. You have a profile, you have your profile, and you see somebody that you like, so you swipe right on the person. But there's still no communication channel open, like the chat still hasn't opened up so you can talk to the other person. Only when the other person also swipes right on you is there a match, does the chat open, and can the transaction happen. That's basically what trading is. You have a buyer that is swiping right because he wants to buy at a price of $10 per share, which means that he has to be matched with the seller that is willing and able to also swipe right at the same price of $10 per share. So if there's a match, the chat opens and the transaction can happen. That's basically what trading is. Trading is like a huge Tinder platform. Again, this is highly simplified. So it turns out that sometimes in a dark pool, you're not always gonna find a match. So the best thing that you're gonna do if you didn't find a match in the dark pool, you're then gonna go to another platform where there's more activity to hopefully find a match over there. In other words, you're gonna exit the dark pool and you're gonna go to the public exchange because for sure you're gonna find a match over there. So that's another reason why trading only in the dark pools is not possible for the big dogs. And there are many other reasons as to why the big dogs don't limit themselves to only trading at dark pools. But this is not a lesson on dark pools. I want to keep things as simple as possible, but do know that yes, big dogs can trade in dark pools and it hides their volume, but the big dogs don't trade everything on the dark pools. If the big dogs hide much of their volume through dark pools, why do we care to look at volume on regular exchanges? Because not all of their volume is hidden. It turns out that the big dogs still trade a significant amount on public exchanges for the two reasons that we saw in the previous slide. And that public part is what we see. And that public amount is actually enough for us to spot their footprints and follow the move. So yes, in an ideal scenario, we want to see everything what the insiders are doing. You want to see every single move that the big dogs are doing. But that's not reality. The reality is that there is something called dark pools, which is where you pay for privacy. Only those big dogs can pay those premium prices. We cannot pay the premium prices. So do we get to see all of the volume? No, we don't. But do we get to see enough volume to still know what their intentions are and to still be profitable? Definitely, 100%. All in all, I hope that I delivered value to you through this lesson by showing you that 1, you're standing on solid ground. 2, that there are many gems out there that in case you ever feel lost, now you know what to Google. You can say Wyckoff effort versus result book. And trust me, you're going to find that book and you're going to find many answers over there. You're going to find lots of inspiration if you ever feel stuck. And lastly, I hope we learned that reality that there is something called dark pools and that, yeah, we don't get to see the full picture, but we get to see just enough to know what our next step should be. In the next session, we're going to look at the price aspect of volume price analysis, because remember that volume price analysis is looking at volume and price together. So we're going to take a technical dive into the aspect of price. We're going to answer questions such as, how is a price candlestick formed? What does a price candlestick alone tell us? How do we dissect a price candlestick? And why is interpreting price candlesticks a valuable skill to master as a trader? And as always, remember to enjoy the process, unless you have other plans.